In this video, we are going to be analysing Mullen, ticker MULN. So to get straight into it, we can see this stock was down basically 7% on the close on Friday. Now, what are key levels we are looking at going lower? Because we can see earlier this year, we had a high of around $16. We are now around 28 cents with a 52-week low of 21 cents. So this stock has been very weak in the near past, or really just this year in general. So what levels are we paying attention to going lower? So if we continue this downward trend, we do have a key support level at 22 cents. Now this is going to be a very strong level because it's our 52-week low. It's basically just a support low for the year really, but it is also our statistical mean on the 6-month chart. So coming into this level, we do expect buying pressure to come in. Be watching it. High volume will probably start coming in. We can see definitely recently on Mullen anyway, volume has definitely increased. I mean, we're doing about 170,000 or is it 170 million? Now we're doing, much closer, 5-6 times the volume we were once doing. So seeing this, definitely interesting to see, and we be really looking at the volume. Once we come into this $22 level, you will most likely see a break of kind of this average. So we want to see a volume of at least above kind of 500 million. This will just show that level is significant. So if we come into that is our support, but really going lower, at least on the longer term time frame, we have no support levels. We can see 0 is here. Obviously we can't trade a stock past 0. There is no deviation levels going lower. So if we were to break that 22 cents, really the only thing I could be looking at for any sort of levels is just by looking at how this stock reacts to kind of the key psychological levels. So 20 cents, 15 cents and 10 cents. Really though, if you're coming down to these kind of levels, it could be easy to trade if you kind of see some sort of bounce back above the key levels, because then it gives you strong supports and kind of targets to trade to. If you're buying it below this 22 cents, you are kind of just buying a falling knife, hoping that it will bounce back up. Now, one thing that is good if you are looking at this stock, we can see it is kind of pushing down at a divergence. I mean, we'll have to see how it does in another 6 cents. But it does look like we will most likely be trading at a divergence, which is a good indication if you're bullish on it. Again, obviously that is going to leave probably a lot more people buying it, because a stock like this, it does seem to be a bit more retail focused, with more of retail traders buying it. But anyway, that is the key support. We can quickly cut down to a shorter term time frame just to see if we have any supports. And then we do quickly get a 13 cent support and a 1 cent support. So again, not all that helpful, very far from where we are now, but just levels to maybe note if we crash or continue to crash quite heavily in the next few days. But to get onto then the resistance levels, and again I think these would be more the key things to be looking at trading this. Once we start breaking these levels, it will just be a lot easier and kind of more fluid to be able to trade. And by that we want to be looking at least 91 cents. Breaking through there would be $1.50/$1.62, and then breaking further would be $2.30, $3, $4.20, $7 and $9.70. Now obviously we're at 20 cents. We've given you levels all the way up to $10. What's the likelihood of hitting these? Actually, those high ones, probably not all that much, at least in the near future. But considering this stock went from $16 to 20 cents, that means this stock is very volatile. Might mean there's a lot of bearish reasons to be on it, and it's probably a fundamentally weak company. But either way, it shows that the stock is volatile. So it definitely can provide some trading opportunities. I know there is a lot of don't want to say bag holders, but people that are definitely loving this stock, people that are definitely still stacking up on this stock. So there is a lot of interest in this stock and a lot of bullish interest by that. But again, there is a reason if a stock has crashed this low. There is a reason for it, and usually it's not a great fundamental reason. I don't even need to check or go through their balance sheets. I don't need to go through their anything really to see if a stock goes this low. It's not a technical reason. There is a fundamental problem with this company. So do also be cautious when buying a company like this, because there is a fundamental reason that it has sold off this far, but even if there wasn't, if it can sell off that hard, there is still a reason for it. It might just be then traders or institutions are just not happy with this stock. They don't think it's a good stock, even if it is fundamentally performing well. But again, there is fundamental reasons if a stock can crash this hard. So always be cautious when trading this. Look to trade it with tight stops, because these kind of stocks can flush. I mean, as we can see, if you were kind of buying this stock nearer the highs at $11 with no stop, you would be lost, 95% of your value. So really, especially like a stock like this, you may be thinking, oh, it's at 22 cents, can it get much worse? Again, every percent you fall at 22 cents is 4%, so a big impact on the account. And also the problem that you kind of have trading this as well is the spreads, because even if it's a cent, again, that's 4% of your portfolio of the trade just gone. 4% to buy, 4% to sell. There is problems, and kind of just you need to be looking kind of at a longer term play. I mean, these ones are going to be a bit more difficult to get the shorter term plays on, but either way, again, I'm hoping you have a plan to trade. These are just levels where we expect big movement to start happening. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.